Hello everyone. In this video, I will share some useful tips and strategies to help you with your trading. If you find this video helpful, please give it a like and subscribe to the channel. Now, I'd like to review the EURUSD chart from the past few days and discuss the outlook for the future. Before we begin, let me explain two key points about my analysis method. The first point is multi-time frame analysis. To confirm the long-term trend, I start by analyzing the weekly chart, followed by the daily 4-hour and 1-hour charts. Checking the long-term trend is essential in trading. When making an entry, I also analyze the 15-minute and 5-minute charts. Additionally, I follow Dow Theory for my analysis. To briefly explain, an uptrend is defined by higher highs and higher lows, while a downtrend is defined by lower highs and lower lows. A trend reversal occurs when this pattern breaks. If the price breaks below the most recent low after reaching a high, a downtrend begins. All right, now let's take a look at the EURUSD chart. We'll start by reviewing this week's price action. Here's the weekly chart. This week, we saw a small-bodied bullish candle. Last week, the price made a strong move upward, but it seems that momentum has temporarily slowed. Next week, we'll be watching closely to see whether the uptrend resumes or if a correction begins. Now here's the 1-hour chart. The yellow vertical line marks the start of this week as of last Monday. As you can see, there has been very little movement. The market has been in a tight range. Typically, after a sharp upward move, we would expect a pullback or correction. However, this time, we haven't seen any real correction. So what could this mean? Normally, after a strong rally, traders who bought in earlier start taking profits. At the same time, new sellers enter the market, looking to catch the reversal. This often causes a temporary pullback, but in this case, we're not seeing that. This suggests that buying and selling pressure may be balanced for now. It could also mean that buyers haven't closed their positions yet, or that sellers are still holding on without being able to secure profits. If the price starts to rise again, those sellers may be forced to cover their positions, triggering stop losses, which would lead to more buying pressure and potentially another leg up. All right, now let's take another look at the market, starting from the weekly time frame. Here's how I'm viewing the overall price movement on the weekly chart. Last week, the price broke above this key resistance line. So based on Dow Theory, this signals a continuation of the uptrend on the weekly level. However, just like last week, I believe entering a long position from the current price level is risky. Why? Because there's still a strong possibility of a pullback or correction like this one here. If you're aiming for a more conservative and solid trade, it's better to wait for a clear pullback and then look to enter on the dip. As I mentioned in the previous video, I'm also watching for the potential formation of an inverse head and shoulders pattern. This scenario is still valid and continues to be part of my outlook. Moving on to the daily chart, we're clearly in a strong uptrend with higher highs and higher lows. Here's the current swing low, the key support. As long as price stays above that level, the daily trend remains bullish. Given that both the weekly and daily charts are showing strength, we should be focused on finding buying opportunities. If price keeps pushing higher from here, we might look for short-term sell setups, but only near previous resistance levels. Keep an eye on how price reacts when it pulls back and retests those levels, especially that weekly resistance which might now act as support. Next, let's look at the 4-hour chart. We're still in an uptrend here as well. This is the current 4H swing low, and until that breaks, we stay bullish. Just like we saw last week, this zone continues to be in an uptrend across the weekly, daily, and 4-hour timeframes. This gives us a strong signal. This is a market where we should be looking exclusively for buying opportunities. Also, as mentioned earlier, the current price action suggests that buyers and sellers are in balance. You could also interpret this as the market building bullish energy before a potential breakout. Even if we see a temporary dip, there's no reason to change our outlook. This area remains one where we should stay focused on long setups only. Now for the scenarios going forward. The main plan is to look for longs, not shorts. We're watching for a pullback into that 4-hour support area. If price holds and we see a bullish reversal on the lower time frame, that could be a great entry for a continuation move. This could also be the right shoulder of that inverse head and shoulders pattern on the weekly chart. And at this level, risk-reward could be very favorable. However, there's something important to keep in mind when considering a long entry here. The 1-hour chart has already shifted into a downtrend. Here we can see the most recent higher low that was broken, marking the start of the current 1-hour downtrend. So this downward movement can be viewed as a correction within the larger trend, but on the 1-hour time frame, it is a clear downtrend. For that reason, if you're planning to enter a long position in this zone, it's safer to wait until the price breaks above the descending trend line before considering a buy. Also, if the price continues to rise from here, the higher low on the 4-hour chart will shift to this new level. In that case, if we see a pullback from there and it turns into a lower low, that would mean the 4-hour chart is also starting a downtrend, which could increase selling pressure in the market. In short, it's important to watch the strength and momentum of the current corrective wave closely before making a move. As for potential short trades, if price continues climbing and hits the purple resistance line, we could see a short-term pullback. If we get a clear reversal pattern on the lower time frames, a short trade might be possible. But remember, this would be counter-trend, so you need to be extra careful. The bigger trend is still up, so trade cautiously. How did you find today's analysis? If you found it helpful, please give it a thumbs up and subscribe to the channel. I hope your trades go smoothly and successfully. Best of luck.